What happens when price action liquidates a session low, but fails to create a new higher high? In this video, we're going to break it down step by step using a live trade example from my journal. My name is Vi. I document every trade I take and every backtest I run, wins or losses, as I work towards consistent profitability using market structure, liquidity, and price action analysis. In this video, I'll break down this live trade I took on Euro CAD that highlights the power of weak lows as liquidity and how this entry model continues to be one of the most consistent ones in my playbook. We'll go through the higher time frame bias, the lower time frame entry model, and the lessons I learned on this live trade. Let's jump into the chart. Okay, so we rewound the clock back to a little bit after 8:30 Eastern time. We are bullish on the 15-minute. We can see that we put in a lower low and created a higher high and have been retracing since. Now, if we look at this price action, we see Asia session in blue and then London session in orange. What's happened is since London session closed, prices dipped down and actually liquidated this Asia low. And so typically after such a key session liquidity level has been mitigated, we would expect price to take to the next available high, which is London high here. But as we play out New York price action, we'll see that price fails to take this high out and actually starts retracing. So since we're on the 15-minute, we can see that for the 30 minutes here, the price has been dropping down, failing to close above this high. And that makes this low a weak low. Now I'm learning that whenever we have a weak low, we can expect it to get liquidated. And at that point, we can drop to a lower time frame to see if we can get a market structure shift confirmation before moving in the direction of the overall 15-minute order flow, which in this case, bullish. Let's play price forward to see what happens. A few minutes later, we can see that around 9:15, we get the liquidation. And this is my signal to drop down to a lower time frame to see if we can confirm an order flow reversal. Here on the 1 minute, we can see price action in more detail. Here's our weak low, which has since been mitigated. Let's zoom into this price action a little closer. So as we zoom into this area here, price, we can see that we have equal highs here that approached this fractal supply zone and created the push down, breaking this internal low. For me, I'd want to see buyers close price above this level. Well, denoted here with this orange line. This would signal that buyers are now in control and are working to move price up. This is a pretty aggressive level to target since we also have another nice level up here represented by two candles and then this aggressive move down that results in two fair value gaps. It's a matter of preference at this point as to which level you'd want, but I chose this level given the equal highs and the clear respect that this supply zone is getting. Let's play price forward to see what happens. Here we can see that aggressive buyer action moving up, which closes above our level. And if you notice, we actually end up closing above this more conservative level we had just talked about, showing me with even more conviction that buyers are in control. It's at this point I would drop to the 5-minute to see if I could get an entry zone. Here on the 5-minute, we have a nice fair value gap where I'm set my entry at the top of that fair value gap, stops just under the low here. And for a target, you have options. You can either target the current New York high or London high, which remember was the high that this low failed to break. And so perhaps price has accumulated more buyers, more aggressive buyers to finally take that high out. And so that's what I'm going to target here, resulting in a 3R trade setup. Let's play price forward to see what happens. And we can see that we eventually do hit our take profit. Now price tags in and spends a fair amount of time in drawdown before finally finding the buyers to push past this key area, at which point I went to break even. Price then continues up moving forward. We reach some resistance here and notice a pullback. It's curious that these sellers stepped in almost at the same area as they stepped in previous, preventing this low from creating the higher high that we were looking for originally. And so we see that the remaining sellers came in to push price down, but the amount of buyers at this point is just too great. And we see price push up and take ultimately that London high that we were targeting. So the lesson here is simple. Weak lows are liquidity, and liquidity gets taken. And being a little aggressive on the 1-minute time frame helped us find a great entry position without missing the move. As I said at the top of the video, this entry model has been one of the most consistent in my journal. And trades like this are always a reminder that the edge isn't just the setup. It's understanding why price is reacting at certain levels. I'm not a guru. I'm just someone documenting my journey towards consistent profitability using market structure, liquidity, and price action analysis. If this breakdown helped you see the charts differently, then subscribe. And if you want to see another trade from my journal, click the video right here. Every trade teaches something different, and the next one might show you something you've never noticed before in the charts. I'll see you there.